I'm James Turk. I'm a director of the GoldMoney Foundation, and I'm here at Europe's largest precious metals mining conference, the Edelmetallmesse in Munich, Germany, and I'm pleased to speak with Johann Saiger, writer of the Midas investment newsletter. Johann, it's a pleasure to see you today.
It's always a big pleasure for me meeting you.
Thank you. Let's start by talking about gold and silver. What are your views here? Are you bullish, bearish, neutral?
I'm one of the greatest gold bulls since 10 years. So far I've become right, and I'm sure I will become right for the next years also. My short-term outlook is bullish, but I'm a little bit afraid of some complications because of the situation in euro currency.
With the sovereign debt crisis that's going on.
Yes, the debt crisis, because I do believe the debts will never be able to pay back.
Yes. There's just too much debt.
Too much debt. It's not even possible to pay all interest rates or to keep this debt alive.
Yes.
So there will be only two solutions or two things. I see we are walking on a very, how can I explain it?
Top of a fence?
Yes.
Could fall either way?
Either way. We can fall in deflation and we can fall in hyperinflation. But I do not believe when we fall in direction deflation that there will be a deflation. I only believe there will be a deflationary shock. And in this shock, the central banks will open the monetary, will print much money. So, but they need to start printing so much money when we begin a deflationary shock.
Okay, so Lehman Brothers, for example, when it collapsed in 2008, that's what you mean by an example of a deflationary shock.
Right.
And then they started quantitative easing and money printing.
Yes, of course.
And that ultimately is leading to more inflation.
Of course, yes. So I think we will have some turbulences on markets. Stock markets can become turbulences, commodity prices, and even precious metals prices, but only for a short time.
Yeah.
And when we come back, money printing will start, and we will see the biggest rise in gold and silver we have ever seen.
So going back to my original question, I know you've been very bullish and I know you've been very accurate, but I'm asking you this because a lot of people today say gold is in a bubble. Obviously you don't agree.
Oh no, it's not a bubble. When gold was $850 in January 1980, yes, now it is double price.
Yes.
But according to inflation, in the meantime, gold should be 2,200 or 2,300. Next thing, when gold was in January 1980 at $850, Dow Jones was at 850. So they met at a ratio of 1 to 1. In the meantime, gold is 1,700 and Dow Jones is 12,000. Who is talking about bubbling Dow Jones?
Yeah.
It's much more realistic.
Yeah. I like to say when people ask me that question about is gold in a bubble, and I go back to the 1980s as well, and I relate it to the Dow Jones Industrial Average,
Also,
which had been under 1,000, for 20 years, since the 1960s. And when it went to 1,200, 1,300, 1,500, the Dow Jones, people were saying that it's in a bubble and it's going to crash, and it just kept going because they were looking not at the value of the Dow Jones Industrials, but they were looking at the price.
Of course.
And that's the same thing that's happening today. People are looking at the price of gold, they're not looking at the value, and they ignore the fact that gold has been debased by governments so much over the past several years that the value for gold is still very good value, even though the price is rising. So that's something you agree with, obviously.
Yeah, of course.
Yeah.
It's so funny, I met many people. I started to recommend buying gold exactly 2001, in February, March. I
Yeah.
told in the next days or weeks, gold we see bottom, and then the century will be the century of gold and silver.
No, that's music to my ears, because I agree.
And I became right, yes, and it was very, at this time, this was very hard. Nobody wanted to believe me.
Yeah.
I was talking at an Iliad Wave seminar, and they told me, no, it's not 250 where gold will start to rise. We first must see $170. I think they're still waiting for the $170 before the gold bull market can start. So in the first time, people did not believe that gold can rise, because the most famous newspaper in Germany, the Bild Zeitung, it's a newspaper for very low. Okay, you know what I mean,
Yes,
yes?
yeah.
They were writing when gold was $250. They were writing, gold has now fallen from $850 to $250, and it will fall till $42 again, because this was the last official gold price. And at this price, the central banks will buy back gold. So if you want to have $250, you must sell now. This Bild Zeitung was writing just a few days before low of gold. So they made many people to sell their gold exactly at
At the bottom.
The bottom.
You know,
I also was very angry. In Austria, because the Austrian Central Bank sold gold on April 2nd of 2001, when gold was $253 or so, $254, almost the bottom.
yeah.
They sold gold 30 tons. I was writing to our of the Austrian Central Bank, why could you do this? And he was writing, but the dollar was not so bad at this time, and certain other central banks also selling gold at this price. So I wonder why the central banks in the last stadium of this great bear market were selling all gold at $250, and they were announcing gold very loudly. They were saying, we have to sell many tons at 250. I wonder how intelligent the best bankers in the world are, because they did not sell any gold at 850, but they wanted all to get out at 250.
Well, they were reading the tabloid newspapers instead.
Maybe they were reading the Bild Zeitung. I was telling to some friends, these are the best paid bankers in the world, the most intelligent bankers in the world. They sell gold at 250. After 20-year bear market, when people were so afraid.
You know, I'll tell you a story. When I was in the university in the 1960s, I studied international economics. And gold, as you know, was at $35 an ounce back then. And I learned that when the U.S. government stopped supporting the price at $35, it was going to go to $7.50. But instead, the gold price started rising, you know, to 36, 37, 40, 42, 45. And I realized that what I learned in school was wrong, or gold was very overvalued. And I basically re-educated myself in three and a half years by reading everything I could, mainly the Austrian School of Economics, you know, Mises, Hayek, Murray Rothbard, and found out how the world really works, and you know what gold's role is to play. And you know, I've been on the right road, more or less the same thing. But you know, what I learned in school was Keynesian nonsense that had no usefulness in terms of the way the real world works. You know, in theory, yeah, it's of interest, but in the real world, it's not. You know, gold has an important role to play. So you, just judging from our discussion, you see gold as a very important form of global money, international money.
I think, when I think back, gold has a role in monetary systems since a few thousand years. The first gold coins were made in in Lydia by King Croesus.
Right.
So since 2,700 years we have gold coins.
Yeah.
And every gold coin since that time ever printed has kept all the worth, all 2,700 years. So governments in Europe has made budget deficits since the 60s, the 70s. Year after year, deficit, deficit, deficit. Can you imagine when somebody has a company and makes 40-year deficit? Goes to his bank, this year I need more money. And maybe 2 or 3 times in 40 years they're coming. This year is very good year. We do not make new deficit, but never talking about paying back,
yeah.
of course. So we have crossed the point of no return. It is not possible to pay this back. And not only the states made deficits, the countries in a state, the communities. In Germany, every second community is bankrupt.
Yes.
In Austria too. So there will be no solution for this. Only when it starts with deflationary pressure, then the inflation will be higher, because then they have to print much more money to save all. Yes.
Well, we've had a euro inflation now 3%, which is above the target, and the ECB last week lowered interest rates instead of raising interest rates to fight inflation. So that's a clear indication that we're going to see more inflation in the months ahead.
But nobody believes 3% inflation. I tell you why. I live here in Austria. When I come to Germany, 10 years ago, I had to pay for my hotel the same price in Denmark than I now pay in euro. When I go eating, I pay now the same price in euro than it was in Denmark. So this is in 10 years, everybody can tell you the price now is the same high in euro than it was in Denmark, but it is 1 to 2 almost. So
yes.
In 10 years, prices have doubled. Though, how can somebody believe 1, 2, or 3% official inflation rate? They're telling us when prices in 10 years double for most goods. This everybody can tell you that this is true. So this is even in America's inflation. You know shadow statistics.
Yes.
Of course.
Yeah.
Then you see official inflation rate in USA is maybe 3% or something like this, but with the same
that's the official rate, but the unofficial rate is much higher.
11. It's 11.
Yeah, there's a U.S. economist by the name of John Williams.
Williams.
Yeah, shadowstats.com is his website.
That's
and
11.
He uses the same inflation formula
As in the 80s.
When President Carter was still in the White House in 1980.
Yes.
And
so this is
that's where you get
correct,
the 11% inflation rate
when
today.
The government do not have to fail this status. It just changed. The rules of life have changed. People are not eating this, are not buying this. They're buying all things which get cheaper. With this trick, you can show every inflation rate you want to show.
Yeah, but the quality of life or the standard of living is actually declining because inflation is actually worse than than the government says it is. Wages are not keeping up with the true rate of inflation, so people have to cut back. They have to spend less, or maybe both the husband and the wife work to try to maintain the same standard of living. I know that's very true in the States. Is that true here in Europe too?
Of course, the same.
Yeah.
The same here.
So let's talk about how this is going to unfold. How is it going to change in the future, or will it change, or what outcome?
Okay,
clearly you're bullish on gold and silver.
Okay, I'm bullish on gold and silver, but I do believe that the stadium we are now is a very, very late stadium, because it is like cancer of the money. What you see is the last stadium of cancer.
Yes.
When banks go bankrupt, when even countries go bankrupt, when every day or every week you hear of new horror things about debt situation. Though this is a stadium I cannot believe can overlive some more years.
Yeah.
Maybe until end of next year, I see. But after that, so I see monetary reform maybe until 2013. So I do believe the next months will be very troublesome.
Will governments try to impose capital controls to try to keep the broken system working?
Of course, they will do a lot of things. And I'm afraid they will also prevent people buying precious metals, because they do not want that people
to exit the euro and go into sound money.
Yes, so this is this can be a problem.
Yeah.
But there is no other solution. Only gold and silver can save us.
Will governments recognize that gold and silver are the only solution, or are they going to continue going down the wrong road?
No, I do think they know everything. They know everything. When they have monetary reform, they planned it years ago. So what now looks like accident is, in my eyes, planned since years.
Yeah. So it's going to be more of the same until within a year or so we're going to see more serious problems, mainly because of the sovereign debt crisis, or will there be other factors like bank problems?
Okay, bank problems are reason of debt crisis. You understand? So debt crisis is the reason for stately problems, the reason for bank problems. It is only the debts which are making these problems. And the debts cannot be paid back regularly. So
what should individuals do besides owning gold and silver? Any other suggestions?
Any other suggestions? Okay.
What about in the stock market? Mining stocks?
I do not believe. Maybe if we become hyperinflation for a longer time, stock markets will not be so bad. But I remember in the 70s, we're talking about the 70s, I remember, gold rose 20 times, from $42 till $850. And you know what Dow Jones made in this time? Just from 1,000 to 650, moving for 15 years. Understand? In January 1965, Dow Jones reached 1,000. And then come back to 750, till 550, then went to 1,000 again, but never could cross over 1,000. And it is the same Morgan Stanley World Index is also like this. DAX since the year of 2000, 8,000, 2,000, 8,000, 3,500, not even 8,000, now going back. So during this time, stock markets are not so good. But gold mines can be better than stocks, regular stocks. So in this case, gold and silver stocks, mining stocks, I like in this situation. But one must be very carefully, because with gold and silver stocks, you should at least have half a dozen different because of risk.
Well, Johann, it was a real pleasure speaking with you today. Thank you for sharing your thoughts with, there are going to be thousands of viewers of this video around the world. It's very much appreciated. Thank you.
Thank you. It was so nice meeting you.
I'm James Turk. I'm a director of the GoldMoney Foundation, and I'm here at Europe's largest precious metals mining conference, the Edelmetallmesse in Munich, Germany, and I'm pleased to speak with Johann Saiger, writer of the Midas investment newsletter. Johann, it's a pleasure to see you today.
It's always a big pleasure for me meeting you.
Thank you. Let's start by talking about gold and silver. What are your views here? Are you bullish, bearish, neutral?
I'm one of the great theory will print much money. So, but they need to start printing so much money when we begin a deflationary shock.
Okay, so Lehman Brothers, for example, when it collapsed in 2008, that's what you mean by an example of a deflationary shock.
Right.
And then they started quantitative easing and money printing.
Yes, of course.
And that ultimately is leading to more inflation.
Of course, yes. So I think we will have some turbulences on markets. Stock markets can become turbulences, commodity prices, and even precious metals prices, but only for a short time to keep this debt alive.
Yes.
So there will be only two solutions or two things. I see we are walking on a very how can I explain it?
Top of a fence?
Yes.
Could fall either way?
Either way. We can fall in deflation and we can fall in hyperinflation. But I do not believe when we fall in direction deflation that there will be a deflation. I only believe there will be a deflationary shock. And in this shock, the central banks will open the money as gold bulls in 10 years. So far I've become right, and I'm sure I will become right for the next years also. My short-term outlook is bullish, but I'm a little bit afraid of some complications because of the situation in euro currency.
With the sovereign debt crisis that's going on.
Yes, the debt crisis, because I do believe the debts will never be able to pay back.
Yes. There's just too much debt.
Too much debt. It's not even possible to pay all interest rates.
Yeah.
And when we come back, money printing will start, and we will see the biggest rise in gold and silver we have ever seen.
So going back to my original question, I know you've been very bullish and I know you've been very accurate, but I'm asking you this because a lot of people today say gold is in a bubble. Obviously you don't agree.
Oh no, it's not a bubble. When gold was $850 in January 1980, yes, now it is double price.
Yes.
But according to inflation, in the meantime, gold should be 2,200 to 2,300.